Hi, this is Wayne Zell, and welcome to the educational portion of Blueprint for Wealth, a fast-paced half hour of content and special guests designed to help you realize your personal dreams of wealth and freedom. Blueprint for Wealth is brought to you by the law firm of Zell Law, with offices located in Reston, Virginia and Savannah, Georgia, and clients all across the country. If you'd like to know more about us, visit us on the web at zelllaw.com. Today, our special topic is focused on foreign bank and financial account reports, the FBAR, and you. What do you need to know about this special topic? It's written into law under 31 U.S.C. section 5314, where the Secretary of the Treasury can require a resident or citizen of the U.S. or anybody doing business in the U.S. to report their financial bank account information to the Treasury. The regulations say in specific that each person who has a financial interest in or a signature authority over a bank or securities or other financial account located overseas must report this information to the IRS on FinCEN Form 114, which is filled out online. It has to be filled out by June 30th of each calendar year for financial accounts exceeding $10,000. What if you fail to meet this obligation to report to the U.S. government your financial accounts? Well, the penalties can be pretty stiff. $10,000 unless the violation is willful, in which case it's increased to $100,000, or if greater, 50% of the amount of the transaction, or if you fail to report the account, the balance of the account or the value of the assets in the account at the time of the violation. Let me give you an example. Let's say Joey is a U.S. citizen and he's got $1 million bank account or securities account located in Greece. He's never withdrawn any of those assets, not even the income from the account, since 1980 when his grandma set up the account with $250,000 of cash. His brother in Greece manages the account for him, and he recently read about the FBAR in the newspaper. What should Joey do? Well, this is a conundrum that a lot of our clients have faced, and we've had to deal with some very, very harsh rules in complying with the back reporting of a failure to report these financial accounts. There's something called the streamlined domestic offshore procedures, where you can basically get a free pass, or at least a reduced pass, to report your failures in the past. It allows taxpayers to certify their failure to report financial information and pay the tax due with regard to those assets, as long as the failure is not due to willful or willful disregard of the law. So if it was negligence or inadvertent, you might be able to qualify under this program. The procedures provide for a streamlined process for filing amended or delinquent tax returns. They provide terms for resolving the taxes and penalties, and for filing amended or delinquent tax returns, and terms for resolving penalty obligations. It's known as noisy disclosure versus quiet disclosure, which I'll get into in a second. The steps in complying are outlined on this slide. You have to certify that your conduct was not willful. You cannot already be under audit with the IRS, and you have to file 6 years of delinquent FBARs online using this FinCEN Form 114. You also have to file 3 years of amended tax returns, and at a minimum, you've got to check the boxes at the bottom of Schedule B indicating that you were required to report your financial offshore activity and your financial accounts overseas. For U.S. citizens and residents, you also have to fill out Form 14654, which is a really complex disclosure document that requires you to not only certify your conduct and disclose everything, but it also allows you to calculate what the penalties are. You should also submit a letter supporting your filing, basically telling your story and giving reasons for your noncompliance. In other words, you relied on your CPA who fills out your tax return to tell you that you had to disclose this information to the Department of Treasury. And lastly, you have to keep your records for at least 6 years in connection with this procedure. Believe it or not, FBAR penalties do survive death. There was a Southern District of Texas case that came out recently in June of 2021, where the taxpayer failed to report his foreign bank account information for many years. So the IRS initiated enforcement action to collect the FBAR penalties, and then the taxpayer died. The district court in Texas, relying on other cases that had come through the Fifth Circuit Court of Appeals, found that the FBAR penalties are really not penalties, but instead they're remedial in nature, and because they compensate the government for specific damage or harm suffered, the result is that it's not treated as a penalty and it does survive death. Other cases in other districts and other circuits reach the opposite result. We wouldn't be surprised if this thing goes all the way to the Supreme Court. If you want more information on how to file your FBAR reports, or if you've got to submit for compliance with the streamlined process, give us a call at 571-203-9355 or visit us on the web at zelllaw.com. I'm Wayne Zell. You're listening to Blueprint for Wealth. Stay tuned for our special guest.